If you have an installment loan, such as a mortgage, a student loan, or an auto loan, and you pay that off. Let's say you've finally paid off your car loan. When that installment loan is paid, it actually becomes a closed account. It's no longer reporting on-time payments. It's no longer showing that credit history or that depth that you've had that. It's now a closed account. I've seen credit scores plummet because auto loans were paid off. If you are coming into a little windfall of money and you don't know if you should put it into your auto loan or paying down a credit card, it's more likely that that credit card has a higher interest rate. And so you'll want to get that down too because you're paying unnecessary interest, and you want that utilization to come down. So you don't want that card maxed out because it actually can hurt your credit score. And you want to keep that installment loan as long as you can. So put that money towards a credit card balance and pay that down. But just know that when you pay off an installment loan, such as a student loan or a car, it can actually hurt your credit score temporarily because it's no longer an active account that's reporting for you.